Hi, Pete Mark with Brokers Guild Real Estate. We're here with JP Sicotte for another segment of Real Estate in a Nutshell, where we talk about Colorado real estate and introduce resources and vendors for people looking in Colorado to buy or sell. JP, thanks for coming on today. Really appreciate it. That's your
Thanks
crew.
for having me, Pete.
All right. So, let's talk a little bit about you. You're with Ease Mortgage. You've been there for a little bit. And so tell us a little bit about yourself. Where did you grow up and your military career, that sort of thing?
Yeah, so I grew up in California, the Bay Area, and then after graduating high school, I went to your United States Air Force Academy in Colorado Springs, and spent 8 years active duty flying RC-135 aircraft out of Omaha, Nebraska, and then couldn't wait to get back to Colorado. Kind of fell in love with Colorado while I was at the academy. And in 2004, I separated and joined the Air Guard up in Wyoming and switched to C-130s and flew those from 2004 to 2019 when I retired altogether. And along the way, while I was in the Guard, in 2013, I started my mortgage journey. And it was just kind of fortuitous. I was doing a year uh, of orders down at Northcom in Colorado Springs, but I was living in Littleton, so the commute was just killing me. And I ran into my mortgage broker at the grocery store. We were kind of friends. We've done some charity work together. Super nice guy. And he's like, "Man, why are you doing that hour and a half commute every day?" He's like, "Why don't you just come? You got an MBA. You're a smart guy. Why don't you just come and do mortgages with me?" I'm like, "Okay." And his office was 5 minutes from my house. It changed my life completely. Um, didn't make a ton of money that first year, but the lifestyle change was so much better, and eventually built up the mortgage business, and now I'm super happy with
Now
it.
you're competing with them.
Yeah, yeah. But he's still a mentor of mine.
Sure.
We still hang out. Like I just had lunch with him a few weeks ago. Like super nice guy, and we've always wished each other the best.
Cool. So let's jump into it. You specialize in VA loans. And being a
Correct.
veteran yourself, you have a little bit of an insight more than somebody who might not have served, but they, tout themselves as a VA loan specialist. So, what are some of the misconceptions that veterans have about the VA loans today?
Well, first of all, some are unaware of the VA loan benefit altogether. So that's one of the things I try to get the word out on. I'm always surprised. There's this statistic about 40% of veterans are unaware that they can use a VA loan to purchase a house. And then about VA loans itself, the other big misconception I like to dispel is that you can only use your VA home loan benefit once. That's not the case. You can use it multiple times.
That's great. So, what makes a VA loan different than a conventional or FHA loan?
There's a few things different. There's zero money. You can go zero money down, 100% financing. Now, the one thing it doesn't cover is closing costs. You do still need to bring that to the table, but the down payment is zero. And there's no PMI. There's no mortgage insurance, monthly mortgage insurance. So it doesn't increase your monthly payment, even though you're bringing nothing down, unlike FHA or conventional loans if you put less than 20% down.
Okay. And is there a cap? Like, how do they get the amount that they're authorized to borrow? Is that
So
like
it
time and
used to be.
service, or how does that work?
Oh, no, no, it's binary. You either qualify for a VA home loan or you don't. Active duty, you just have to have served for a minimum of 90 days. In the National Guard, you have to have served for 6 years, um, or a 90-day or more deployment or, activation.
Okay,
If you have 90 days of active duty, not including training,
after
then
basic.
you qualify. Yep, as a reservist. Yep.
Okay. So what if like what is, let's say somebody has a property, they've written a contract, their agent has written a contract, it's been accepted by the seller. One of the things that a VA requires is an appraisal. So can you kind of walk through that? Like what does that look like on a VA loan versus a conventional loan or FHA?
Yeah. From a valuation perspective, it's very similar, right? The appraiser goes out and looks at recent and nearby comps to determine a value. But the one thing the VA does do is ensure the health, welfare, and safety of the veteran. So they do a safety inspection as well. And they look similar to FHA, they look for things like peeled paint, exposed wires and stuff. But the VA goes a little further and looks for like heaving concrete that could be a trip hazard, or handrails in place going down to the basement or the front steps or whatever. So that there is, oh, they'll look for rotting decks because those are a big safety hazard.
Absolutely.
And then, yeah, if anything like that's discovered, it has to be remedied by the seller before closing. So that's sometimes why distressed homes aren't a good candidate for VA home
Sure.
loans unless you want to do a VA renovation loan. But in general, I would avoid older homes or homes with deferred maintenance
Okay.
if you do want to use your VA home loan benefit.
Okay. And then let's talk a little bit about the pre-approval for a VA loan. How does that differ? Are there different guidelines or?
Oh yeah, there's definitely different guides. I mean, the process is pretty similar. You just fill out an application online, and we still pull credit, and your credit score does have an impact on your interest rate and that kind of thing. But as far as qualifying based on your income, the VA underwrites completely different than FHA and conventional. With FHA and conventional, it's all based on a debt to income ratio, where they calculate how much income you make, and they have a max on the percentage of that can go towards um, your home purchase or your monthly payment. In Under the VA, they actually do a residual income calculation. So it's not based on that debt to income ratio. They just make sure that after paying all your bills, you have a certain amount of money left over a month to survive with, for food and,
Sure.
going out and that kind of thing. And that's determined by the region. There's 4 regions: Northeast, Southwest, and then your family size. 1 to 4, and then anything over 4, they add $150 a month to that residual income requirement.
So, excuse me, what uh what would you tell a veteran who's looking for a VA lender, and what might be some of the red flags to look out for um on that?
Yeah. Well, I would say even if you don't use me, definitely use somebody who does VA loans a lot. You don't want just your run-of-the-mill loan officer that does 1 or 2 a year, because invariably they screw up either ordering the appraisal, or the underwriting process, or whatever, and it can definitely cause delays. That's what happened to me when I first moved to Colorado. Before I was a loan officer, I had a terrible um, loan. Luckily, I had used my VA before, so I knew it existed. But he, first of all, tried to talk me out of using a VA loan, which is
Right.
criminal. Um, and then because the rate would have been higher, I would have had PMI, all that stuff.
Was that
And then,
was that because
but
you would have made more money on his commission or whatever?
no, compensation's the same typically, whether VA
Okay.
or conventional. No, I think it's just because he didn't do very many, didn't understand the process, and didn't
Well,
want to
that makes sense. Yeah.
learn it or screw it up, right? And what ended up happening, I insisted we go VA. So we go down that path, and there were multiple delays due to his incompetence. We had to push that purchase contract back twice before he finally got it closed. So there are definitely pitfalls. The other thing I try to avoid are those really big VA lenders like Veterans United and stuff like that. They're terrible. They're all call center loan officers that really don't do that good of a job or have that great of customer service. Um, and then Navy Federal is pretty good if you do bank with them. USAA is terrible because they do the same thing with mortgages that they do with insurance, where there's no one person responsible. There's no one point of contact. So it's all like
Whoever
loan
answers the
origination
phone.
by committee. Yeah, or yeah, whoever answers the phone looks at the notes in the file, I'm not familiar with it, and that ends up being a nightmare as well.
Okay. Let's see, what else do we have? What advice would you give to veterans who might be nervous about entering the real estate market, current real estate market, I should say, with the slightly higher rates than we've had in the past few years?
Yeah, well, I love helping veterans buy real estate so they can build wealth, right? And just a huge proponent of acquiring real estate as a means of, building generational wealth. So I feel like buying real estate is kind of like planting a tree. The best time was 20 years ago. The next best time is today. So I'm always in any market, really. I'm encouraging people to buy. Sure, there's some temporary downturns, but long-term real estate goes like this, and missing out on that appreciation isn't worth not taking a little bit higher rate, today, because rates are going to come down, and you can always refinance.
Cyclical as
Yep.
everything.
Yep.
Are there any unique advantages for active duty members or reserves or anything like that based on their service history?
No, it's all the same. Like I said, qualifying for a VA loan is binary and everybody gets the same terms. Obviously, with as a reservist, you do need to either serve longer or have you know, been activated for at least 90 days in order to qualify. That's about the only difference. Otherwise, the benefits are identical.
Okay. And what would you advise to a buyer's agent that their client really wants this property? They go in, they submit the letter, they submit their pre-qual, all that stuff, all the documents, but the listing agent is advising his client, the seller, that they're hesitant to accept the VA loan as a term of funding. What would you advise to say to that listing agent?
So yeah, if I can, I typically try to reach out in person and ask why. Get to the root of it. And if it is a distressed home, that's the only excuse I'll use or I'll accept,
Okay.
because it's probably, and the seller doesn't want to do any repairs. And I'm like, I get it. Go conventional. That's the only way you're going to get a smooth transaction. But if they just, mumble about appraisals or taking too long or not wanting to do it, then I'm like, I kind of guilt trip them into like, oh, so you're going to make my veteran client pay more money despite having served our country and earn this benefit, right? That's what you're saying. I kind of put horrible
Sure.
words in their mouth, and usually
Okay.
they backpedal pretty good
Oh,
after
okay.
that.
Okay. So, as a fellow veteran, why serving the veteran community through mortgage lending? Why is that important to you? What does it mean to you personally?
Well, yeah, I always think all my brothers and sisters in arms, we're all kind of have a similar mindset. We all, served our country and sacrificed for it. And it's just a class of people I like to associate with, and B, want to serve. And there's instant camaraderie, and it doesn't matter the branch of service, right?
Yeah,
Like I
yeah,
always,
we've earned the
yeah,
right to diss each other too.
yeah,
We
yeah,
always do
exactly.
that. Yeah.
Yep.
No
Yeah. And
crayon
my
jokes
dad was
here.
a Marine, so he's the most relentless about making fun of the Air Force. It's pretty funny.
Yeah. Uh, let's see. Anything else you want to throw in there? That went kind of fast. I blocked out an hour for it, but we're up
Yeah.
to 37 minutes. So anything else? How about your contact info?
Oh yeah, so it's pretty simple. JP at easemortgage.com. So that's my email. My number is 720-231-2145. And you can find me at JP Sicotte at JP Sicotte on Instagram if you want to see some videos. No, the only thing I kind of wanted to talk about too, or the rumor I wanted to dispel was only around VA entitlement and only having one VA loan. A lot of people don't know that not only can you use your VA entitlement more than once, you can have more than one VA loan at the same time. So let's say you have, and they're about to increase that VA county loan limit. So it's going up from 806 this year. They're estimating it to be around 829 or between 829 and 831 next year. So it's pretty big. And
Sure.
yeah, and so let's say you bought a house zero down for 500K a few years back, and you're going to convert that into a rental and buy a new one. Well, we'll use the 830, we'll say. So you have 330,000 left in VA entitlement. Well, that means you can go zero down up to 330. However, if you want to go over that, you certainly can and still use the VA loan. You just have to bring a little bit of a down payment. And it's not the entire difference between your remaining entitlement and the purchase price. It's 25% of the difference between your remaining entitlement and the purchase price. So let's say you wanted to buy a house for 550 and you have 350 left in entitlement. The difference is 200K. You need to bring 25% of that, which is only 50K, which is less than 10%. And so you'd still be getting a better rate, um, smaller down payment than conventional, and no PMI. So it's really
Oh,
still a win-win, and you can use, like I said, max out, use as much of that entitlement as you can.
well, great.
Yeah.
Hopefully, we've dispelled some myths today and done a little bit of education and help some veterans get into some homes and build their wealth for themselves and their families. So
Yeah, for sure.
I want to thank you for coming on today and look for this on my YouTube channel, and I'll try and get my 13-year-old daughter to see if she can get it up on the Instagram.
All right, sounds great. Thanks for
All
having me,
right,
Pete. I
man.
really
Thanks a
appreciate
lot.
it.
All right.
Yeah, take care.